And welcome. I'm Kirk Hanson, the Director of Forestry for the Northwest Natural Resource Group, and this is our third in an annual series of, or monthly series, excuse me, of Fireside Chats. I have my fireside beside me and a couple cats pulled up. They're an important part of any hearth, at least in this household. And for those of you that haven't joined us in the past, we have, let's see, what did we cover? In January, we talked about tree planting. Last month, we talked about financial assistance for small woodland owners, specifically the USDA's Environmental Quality Incentives Program and the Conservation Stewardship Program. And on that note, for those of you that did join us last month or did not for that matter, if you're interested in funding through the CSP, the deadline for applying is at the end of this month. So you got to hustle into your USDA office and chat with folks there and get your application in if you want to get funding through CSP. We're going to continue these fireside chats all through this year. We're marinating on a number of different topics, but we're going to surprise you probably, a good 2-3 weeks in advance, let you know what it is, which is to say, I don't know what next month's is yet, but between Alex and I, we'll figure it out and throw something out there to hopefully entertain and edify you all. Let's see, while we're providing some updates here, I also want to let folks know that NNRG has a whole lot of workshops happening over this year. And fortunately now, a lot of them are going to be in person again. So we're going to get off this Zoom platform, finally start meeting together in the woods. And we have workshops on topics like climate adaptation, how to adapt your forest to climate change. We have workshops on thinning. We have workshops on the economics of thinning and uneven age management, workshops on pre-commercial thinning and seedling release, and a lot more. So if you go to our website, nnrg.org, you'll see all of the events that we have scheduled. And not all of them may be up on the website yet, but if you sign up for our newsletter, you'll be sure to know about anything that's coming along. But a lot of great opportunities to get out in the woods and learn about forestry. So tonight's fireside chat is about kind of two topics that come together. It's the overriding topic is Washington timberland taxes. And we're going to talk a little bit about current use taxation, how your forest land property value is taxed and how you qualify for reduced taxation by the fact that you grow timber as a crop. And we're also going to talk about the Washington excise tax. So when you get to the point of harvesting timber, this is kind of a special tax that is assigned to your timber proceeds. And to lead us through this topic, we're joined by Chris Westwood. He's a forester with the Department of Revenue. And I gave Chris the unenviable task of taking a very complicated topic and distilling it down into just 20 minutes. But in having talked with Chris about this, he knows his business. And I think he's going to be able to do that just fine. So here's what's going to happen over the next a little bit less than an hour now. Chris is going to have about 20 minutes to take us on a journey through Washington timberland taxes and tell you kind of the core take-home messages that you as small woodland owners need to know. And then Chris and I will probably chat for a little bit. I've got a few questions to pepper him with, and then we'll open it up. And any questions that you have, it'll be more of a open discussion at that point. And we can squeeze Chris's head for everything that's in there that's of relevance to us, and then send him off exhausted. And hopefully we'll all be pleased by the end of this hour together. So with that, Chris, that was probably the world's most awful introduction that you've ever had. If there's anything more enlightening you'd like to share about yourself with us that we don't know, please do. And otherwise, I'm going to let you take it from here and Yeah, edify us about Washington timberland taxes, and thank you for joining us.
Oh, thank you for the opportunity. Let's see if I can get this to work now, huh? Oh, is that working?
Not quite yet. Maybe it's speeding through the intertubes as we speak, but keep pushing buttons and let's see what happens.
Okay. Well, got something to go ding. Let's see here. Huh.
It's always when you're on the spot, isn't it? That's what I've found. You know, it works when we test it out, and suddenly when you're on the spot, then
Yeah, then it doesn't work. Okay, here, I think I got it now. Let's try.
Something's happening. There we go.
Something's happening. Uh-oh.
No, we got it.
Okay, good.
Perfect. There you go.
All right. Well, as Kirk said, I'm going to go through two topics really quick. One is current use taxation, and the other is the forest excise tax in Washington State. In Washington State, we have a current use law, which there are several different classifications of current use. Lands are usually taxed on highest and best use. In other words, what a willing seller and a willing buyer will pay for the land. But the legislature recognized that there are some lands that need to be taxed on current use, what they're currently used as, to encourage people to maintain them in those statuses. And two of those timber type current use situations are designated forest land and current use timber. If looking at this chart, you can see that the programs are very, very similar. And back in 2014, when the legislature dropped the land requirement to 5 acres for designated forest land, previously it was 20 acres. The programs were virtually interchangeable, except for a few topics like where you apply and what happens when you remove them. So then they also allowed the counties to combine the programs. They combined the two programs under designated forest land. And right now, out of 35 counties, 35 are the ones that have designated forest land, 16 have combined them. So now those 16, everything is done in the assessor's office. So you can see, I said greater than 5 acres because generally when people have 5 acres of property, they have a home site, and they remove about an acre, at least an acre for the home site. So you wouldn't have enough acreage then to qualify for the program. So the biggest difference is where the application goes. Designated forest land, it's the assessor's office. Current use timber, the application starts in the planning department, and then the county legislative authority makes the decision. And then the other big one is when it's removed, there's compensating tax for designated forest land and additional tax for current use timber. Now, compensating tax for designated forest land is 9 years plus current, or however long the property was in the classification, up to 9 years. And that is the current difference, because the assessors don't have to keep a dual roll. Dual roll meaning they keep the forest land value and the higher and better value. And that's what they do in current use timber. So the additional tax in current use timber is 7 years of the actual difference. It's a accounting nightmare for the assessors, but that's the way the program was set up. So when they had the opportunity to combine, they really wanted to combine. And the big thing I always talk about is the county determines land eligibility. So you want to make the current use administrator or the assessor your friend, because they are the ones that are going to make the decision on your application. And as I said, it's current use taxation. So we don't tax on the highest and better. It's based on 2 separate classifications: land grade and operability class. Land grade is based on site index or site class, and that's how well the soil can grow trees. It's on the west side, it's on a 50-year site class, and on the east side, it's a 100-year site class. And that is how tall a tree is expected to grow in that number of years. and it's broken out by species. On the west side, we have Douglas fir, hemlock, and red alder. On the east side, it's simply Douglas fir and ponderosa pine. And this is a sample of the 2020 chart that we produce each year. Every year we have to recalculate them. And operability class is based on the physical qualities of the ground, the intrinsic values of the ground, and how operational limitations such as slope, erosion potential, the effects logging may have on the soil. So land grade 1 through, there's actually 8 of them, land grades. 8 is non-commercial, 7 is generally marginal forest productivity. So 1 through 8 land grades based on how well it can grow trees, and then their operability classes are 1, 2, and 3, 4. 1 is favorable, flat, easy, no limitations. 2 is a little tougher, and 4 is extreme. Anything over 65% is considered extreme. And you can see how the prices drop as you go down. There are counties that have limitations on what they allow in. There's several counties on the east side that if you're below, or if you have less than a land grade 6 operability class 2, you can't get in the program. And that's something you need to be aware of. Most west side generally does not have that issue. And as far as the classifications go, the management plan is almost required everywhere. For current use timber, it's required by law. For designated forest land, it's the county's option. And you can read the definition here, trained forester or other person with adequate knowledge. So if you take one of the stewardship classes or coached planning or something like that, you can write your own plan and the person who helps you can sign off on it too. One of the things I emphasize is that most counties have their own template now because they like the things, they like the information in the same area on every plan, so they can turn to the plan and look at it and know what they're looking for. But Washington also has the general template, which is it's 26 pages right now, but not the whole thing needs to be filled out. But what it does is it sets up everything you need for NRCS, current use, or any of the other cost share program type things where they need a specific plan. So I always encourage people to check with the county current use administrator or the county website to see if they have their own template that they like to use. An example is Clallam County. I know they have one that they like to use. And they generally reject the plans that are not on their template. So it's plan to check. And the acid test that's supposed to be for designated forest land is primary or primary use, because the property is supposed to be primarily used to grow and harvest timber. And lately, most counties have been putting a big emphasis on and harvest. And the biggest thing is that when the appraiser or whoever looks at your property, the land has to be used for growing timber. So any other use has to be conflicting or non-related. And one of the biggest things you have to do is in your plan, if you have statements like, I don't intend to harvest, or I'm maintaining this property for ecological reasons, that they're going to reject the plan immediately because it's supposed to be to grow and harvest timber. So you get your plan approved and you're off and running. So you harvest your timber. Now we're getting into the area where I get most of my pushback. Forest excise tax. Okay, I lost my place. Okay. Forest excise tax is 5% on the stumpage value of the timber, harvested timber. Stumpage value is simply we're trying to get to the value of the trees standing there. So it's on the stumpage value of the harvested timber. And it's known as a harvest or severance tax because it's due at the time of harvest. It's due the end of the quarter in which the timber was harvested. And stumpage refers to the value of the timber after all the logging and transportation costs are pulled out of it. Basically, the value of the timber standing there. And it's pretty simple, really. The forest excise tax applies to all timber harvested within Washington state. So if you harvest timber, you're going to have a forest excise tax liability. And the way it's due every quarter, your FPA or your forest practices application or your county permit is active. So every quarter they expect a return. Even if you don't do anything, you have to file a no harvest return, and I'll give you a number to do that on a little later. It's, as I said, it applies to all timber harvested within Washington state. The 5% is split between the county and the state. 4% goes to the county, 1% to the state. Now, there's also a thing called the Enhanced Aquatic Resource Requirement Credit. So if that credit applies to your harvest, then your tax rate drops to 4.2%. DNR is the one that decides whether you get the EARR credit, and they are the ones that tell us whether the FPA is eligible for that credit, and they are the ones that we administer the tax, but they administer that credit. So one of the big things that happen is in harvesting, people get confused as to who is liable to pay the forest excise tax. Now, if the ownership is transferred prior to harvest, like in a standing timber sale, then the purchaser is liable for the forest excise tax. And the forest excise tax will be paid on the purchase price. The landowner, however, is still liable for any B&O tax, and I'll cover that a little bit. If the ownership is not transferred prior to harvest, like usually happens with small harvesters, you hire a contractor or you do your own work, then the landowner is the harvester and the landowner is liable for the forest excise tax. Even if the consultant or contractor, or even if there's a paragraph in the contract that says they will pay the tax, if they don't pay the tax, the landowner is still the one that is liable for the tax, and we will be calling the landowner, not the harvester, because we don't administer third-party contracts. And that's a big one that people have trouble getting over, but it's the way it works. So the forest practices application, if it's a DNR permit, is used as a tax registration document. The person or entity listed as the timber owner is the one that is registered as the taxpayer. So it's really important on who signs the forest practices application as timber owner, because so many times landowners will just fill out same across it. Well, that means we're coming to you, even if someone else is really the timber owner. And a registration number or a tax registration number, we call it a TRA, government acronyms, is required on the permit. And before you can get the permit issued, you have to have the TRA. It's either an 800 or 600 number. And that number is, once it's issued, you don't have to keep getting new numbers every time you harvest. It's your number for as long as you keep it active. So every harvest is under that number. And that's the number you call to get a TRA. So what happens if you're not required to get a DNR permit or county permit, which sometimes happens with danger trees or other things? You still might have, since it's a forest tax liability issue, because it applies to all timber harvested within Washington state. You can still have that liability, and it's not really nice when we find that after the fact and have to cold call and ask about how come there's timber harvested and no payment. Excuse me. So if you have an issue, or you think you're going to harvest and you think you have an issue, it's best to call and talk to a tax service representative or a forester. Now this chart, forest excise tax has three ways you can pay. Yeehaw. There's the small harvester return, which is for harvesters that harvest less than 2 million board feet total in a year. There's the standard detail or large harvester. And then there's the public return. Public returns if you buy a public timber sale like DNR, city, county, municipality. So I don't really cover that very much because most people don't do that. The norm for small harvesters is the small harvester return. It's there's three ways to pay under the small harvester return. It's transaction based is the most popular way, where the gross sales, your share, the logger share, trucker share, minus your harvesting and marketing costs equals your taxable stumpage value. Pretty easy. Second way is department allowance, 35%. So you have your gross sales and you're only allowed to take 35%, and that equals your taxable stumpage value. That is used if your costs are non-documented, unknown, or clouded. Say you contract with the person to stump and grade the area or something like that. That's not a logging cost, so that can't be deducted. If you can't break those out, then you're gonna have to take the 35%. Or if you self-logged it, if you logged your own timber, that's 35%. And then there's also on that same form, there's standing timber sale. If you purchase a standing timber sale, that's the form, and you log less than 2 million feet in a year, that's the form you use to pay for standing timber. Small harvester also has the opportunity or the option to use the standard detail return, but that takes a lot more record keeping, scale receipts, stumpage value area, species, destinations, things like that. And it's usually not the best for a small harvester, but it can be. So as I said, it's all 5% of the net stumpage value, unless you qualify for the EARR credit, and then you multiply your net stumpage value by 0.008 and you subtract that from your tax. All right, so an area where people get clouded and most of my work comes from is allowable harvesting costs. Now, most always you can deduct what I call the 5 4-letter words: fall, buck, yard, load, and haul, because you have to fall the trees, you have to buck them into logs, you have to yard them to a collection point, you have to load them on some sort of conveyance, and you have to haul them to a processing facility and the FPA fee. So those are always deductible. You can almost always deduct those. Marketing costs are where things get a little questionable because people get a little creative. Obviously, timber sale preparation, like timber cruising, marking, sale administration, harvest administration, those are all deductible costs, but those costs need to be very clearly documented in a written contract with a professional forester or somebody that's in the business of doing that. And they need, I can't emphasize enough that they need to be documented prior to the harvest, so that your contract and the documentation is prior to the harvest, so you don't try to work it up after I call. So allowable marketing costs, there are some, but you just have to have it documented. Miscellaneous costs is where almost everybody runs into trouble. Slash disposal costs to abate extreme fire hazard. If it's required by DNR or by the county, it's allowable, but I don't call you, I call the DNR or I call the county. And if they say they didn't allow it or they didn't need to do it, then it's not deductible. Temporary roads are just that, temporary. They are obliterated or rendered absolutely unusable after the harvest. They're only good for the harvest. Temporary easements, the same way. The only thing they're used for is the harvest. And then, of course, the forest practices application fee. Basically, any cost that was directly and exclusively related to the logging and required to bring the timber to market, and only that. No future benefit beyond the harvest. So if you're looking at a cost, you have to say to yourself, could I have harvested without this? And if you come up with yes or maybe, then you probably can't deduct it. This is the entire small harvester form. It's an old one because they were trying to encourage everybody to file electronically now. And I put this up for a couple of reasons. First one is the real cool red circle here. As I said, you get a forest tract, you need to file a forest excise tax return every quarter your FPA is active. Now, if you don't do anything, then it's called a no harvest report. And if you file paper, you just check this little box, sign it, and send it in. Or there is a number you can call, and I have it written down later. And all you have to do is call up. You have to have your name, your tax reporting account number, your FPA number, and the quarter and year in which you're reporting no harvest, and you're done. That's very important because people say, well, I didn't harvest, I don't need to do anything. And then you wind up getting a call from one of our foresters. The other thing that's very important is right next to that box is all harvesting is completed. If you know you're done, I know people keep their FPAs open for a while to keep them working. But if you know you're done, check that box and you won't get bugged anymore because we're assuming everything is done. And the other thing I'd like to call attention to is this little box over here, the itemized costs. Just because there's all these boxes doesn't mean you have to fill them all in. Sometimes less is more. As I said here, logging, hauling, consulting, and FPA. Those things are generally what's allowed and they work fine. Another tip is if your logging costs are over 50%, you're going to get a call from a forester because we check on it. So if your logging costs are bumping up against 50%, be prepared to have documentation or tell us why they're over that. Now, I deal a lot with the east side, Kittitas and Chelan counties, and a lot of the harvests over there are 60-40 split, 40% to the landowner, 60% to the logger. And if it's after trucking, that's almost a 70-30 split. So, just if it's documented, then there it is. The other thing I'll say about this is if your contract is a percentage contract, say 50-50 or 60-40, whatever, don't break everything out in that little box. Just write 60-40 by contract and put down the cost. I mean, that doesn't mean anything to the office people, but it means a lot to a forester when he looks at it because we understand, okay, that's just by contract then. All right, B&O tax or business and occupation tax. This is one of those things that is, it has a lot of variables and a lot of moving parts, and I beg you not to call me if you have an issue with it. I do just enough to be dangerous with it. So it is 2007. They changed it from it used to be anything over $100,000, but once you broke $100,000, you had to pay for 100,000 plus whatever. Now the $100,000 is a deduction, so you only pay the amount which is over $100,000, and that's in a year. So if you are logging, and that's on your gross, so if your gross proceeds are over $100,000, then you're going to have a B&O liability. Like I said, they want people to file electronically. You get a preferential rate for that. The good part is small harvesters are generally qualify for the small business credit. And the small business credit can raise the threshold to $223,000. It's just a chart that you read off of. The thing you have to do is you have to fill out the multiple activities tax credit, because most small harvesters don't see themselves in the business of harvesting. But that's the way the state looks at it, because you're not only an extractor, you're getting taxed for extracting, manufacturing, and wholesaling. And so to assure you don't get taxed multiple times, you have to fill out the multiple activities tax credit form called the MAC. And once again, if you call a tax service representative at one of the offices, they will walk you through it, and they can do it in less than an hour. If you come to me, then we're going to take half a day, because I do just enough, like I said, to be dangerous. And I have to check my math about 5 times to make sure it's right. So these are the numbers for the B&O tax, B&O tax assistance, and electronic filing assistance. Electronic filing assistance is really critical because we had a new program, and none of the foresters had time to play with it before they released it. So we have not played with the electronic part of the filing. Embarrassing to say, but such is life. Taxpayers are required to keep records for 5 years. The more detailed your documentation, the better it will be. As I tell people when I teach the stewardship classes, if you come into my office with nothing, I can't do anything for you. If you come in with a shoebox full of receipts, I won't like it, but at least I can do something for you. So you want to make sure you have copies of your scale tickets, purchase orders, contracts, receipts, everything. Because the more thorough your documentation, the more likely you're going to get the deduction. And one of the things I always emphasize is those are your logs until they hit the mill. That's your property until they hit the mill, and you get paid for them, which means you have a right to all those receipts and scales tickets and all those things. I throw that out there because people tend to forget about that, or they do what I think is unthinkable and let the logger get all the money and divide the money. An issue with me. The other thing you might wind up bumping up against is federal taxes. That's way beyond my scope, but these websites are excellent. The timber tax website, that's a nice clearinghouse. Internal Revenue Service, that's not so helpful. But the Forest Landowners Guide to Federal Income Tax and the Federal Income Tax Guide on Timber, both are Forest Service sites. What's her name? Linda Wang used to update those, and she was fantastic. She actually called you back when you called her or emailed her. I really emphasize people to look at all those and to go to all of them because they are good sites if you have internal federal tax questions, and also to get a good tax professional. And that's the contact information and that kind of stuff. There's the number for the no harvest reports, the 360-705-6708. People always call me, say they have to file no harvest. Well, I tend to be a nice guy, so I'll take the information and I'll call for you, because all it is an automated push button thing. But it's really simple. If you have that information written down, name, TRA number, FPA number, and quarter in which you're reporting, it's not a big issue. Okay, how did I do, Kirk?
All right. That was great, Chris. That was probably the most succinct presentation on both the DFL and the excise tax that I've ever heard, but you hit the highlights. So
well, I just want to say that usually is a 50 to an hour and 15-minute presentation there. So there was a lot of hacking and chopping going on.
I appreciate that. Yeah, I think I asked you to give us the greatest hits for small woodland owners. What are the things that we really need to take away? And I think you did that. So I've got a few questions, and while I ask these of you, I would invite folks that have been watching to either, if you have questions, you can put them in the chat. And then Alex will ask those of Chris, or if you want to hold on and ask them yourself, you can do that. I just have a few questions myself, and then we'll take some questions from the group out there. So let's see here. And I'll start with the excise tax. Do you know, is the tax revenue that goes to the state and to the county, is that earmarked for any specific purposes, or does that go into some general fund?
No, actually what happens is the state collects the money. If you read the contract, we actually work as contractors for the counties, and so the state treasurer puts the forest excise tax distribution. That's one of my jobs, is keeping track of distribution too, in a timber tax account for the county. And then the counties have to distribute it. It's distributed on a priority basis, priority 1, 2, and 3. Priority 1 is voted upon bonds, excess levies, and things that bonds and stuff that are all voted upon, or what's the other word I'm looking for? Anyway, and priority 2 is school M&Os. Or they're not M&Os anymore. They're enhancement levies. There we go. There's a new term for it. Anyway, so it's a priority system, and there's a worksheet the counties have to fill out, and I review the worksheet. And so it's not really earmarked, but it's distributed on a priority basis based in RCW.
Okay, great. Thank you. Also on the excise tax, so with a lot of the projects, the harvest projects that we manage, my organization manages, we're often thinning in young Douglas fir plantations. It's the first entry thinning, so you've got low timber value, and since it's thinning, there's a high logging cost. We as the consultants charge a cost, so it's not uncommon that the total cost there is going to be 60, 65, maybe even 70%, of the revenue, just depending on, especially if it's really crummy timber. So, on a small harvest project where the costs are high, or sometimes even a break even, if we're running high on pulp in the stand, is it common to pay little or no excise tax?
Yeah, those kind of operations that you're talking about are the ones that we spend a lot of time on, because we usually have to do a site visit, because it's not that big of a deal, because if the costs are documented, great. Okay, we're just going along just fine. Because you're right, 70-80% is not uncommon for that stuff. And what happens is they wind up with little or no liability. And it just needs to be documented. Landowner needs to document the costs. And during the site visit, we just have to confirm everything, that yes, it was indeed a thinning. Yes, it was in low value timber, that kind of thing. And most foresters know their areas well enough that they can generally look at a map and go, oh yeah, I know that. And they don't even have to do a site visit.
Okay. I've got the 2 questions for DFL related to the DFL, a designated forest land current use tax, and then I'll open up and get out of the way and let other people ask questions. But the first is, in order to remain compliant with DFL or to qualify for DFL, is a forest owner required to harvest timber on any kind of regularity? What if their plan calls for just, again, thinning every 20 years or 30 years if it's really low site productivity?
That's a good question, and it's a tough question. It's county dependent. I hate to say that, but it really is. Technically, all the law says is it has to be managed to grow and harvest timber. That's all the law says. It doesn't put a time frame, amount, or anything else. Now, the smaller acreages, 10, 15 acres, if someone takes 2 loads off a year, that should suffice. If they clear cut, obviously it's going to suffice, but then the county's missing out on revenue for the next 50 years or something like that. there really isn't, but it's county dependent. And that's where you want to know what the assessor and the current use administrator are thinking. And you need to write your plan accordingly. I just reviewed a plan where the person said they were taking firewood, and that's fine, but you just can't say firewood because that's not harvesting timber. You have to attach that to a stocking reduction, a thinning, something like that. I've looked at sites like that where someone has claimed, I forgot how many cords of firewood, and I've gone out there and thought, oh, here we go again. Takes me behind the barn, and whole side of the barn is full of firewood up to about 8 feet. And you're going, oh, okay, I'll go now. It was a 15-minute inspection. And that's the kind of thing that it's county dependent. But if you're going to say something like that, the plan has to back it up.
Okay. Well, that I think just answer my second question is, are there other forest products that qualify as timber products? So firewood, I work with a lot of folks that are milling their own logs into lumber, and what I've been told by some counties is as long as there's a commercial transaction between two parties, and like you said, you have that documented, you don't necessarily have to be putting logs in a truck and sending them to the mill.
Right.
You could be selling firewood, could be selling lumber. But as long as you have that, you're filing, you have an FPA, you're filing your excise taxes, and you have documentation that you still will qualify. And I see you're nodding your head up and down.
Yeah,
so.
yeah, because I have several people that mill their own lumber, and I've gone out and asked them just to gross scale, take the small end diameter, the length, and then, see what comes out the other end of the mill. One guy is reporting on gross scale because he has a beautiful second growth stand that hardly has any defect in it. So gross and net are so close that it doesn't make any difference. And I have two other people that are reporting their forced excise tax on what comes out the other end of the mill. And I'm willing to take that because that board footage is board footage, and if that's coming out the other end of the mill, I'll take that.
Okay. All right. Well, great. Well, thanks for indulging me. I see that we've got some questions in the chat already. Alex, what are you finding in there?
Yeah, and we also have questions that people sent in when they registered, a couple more. So Laura asked, is DFL or current use better? I don't know, Laura, you're welcome to expand on that if you want to.
It's not necessarily better. See, originally when I did it, it was based on acreage. DFL was primarily the large timber companies greater than 20 acres, obviously, and all the Plum Creeks, the Georgia Pacifics, the Murray Pacifics, and they had designated forest land. Well, we slowly started whittling away at the acreage, and current use was primarily for the gentleman farmer, 5, 10, 15 acres. And that's why it was pretty easy to keep the dual role and all that stuff. So it's not really better. It's just a little different. Some people really liked current use because when they pulled it out, it was based on the 7 years actual difference instead of the current difference. And if you're in an area with a lot of growth and this current difference could be substantial.
Laura, does that answer your question or?
Sorry, yeah, sorry, I'm Laura here. I'm unmuted, and yeah, I think it may be something that I would have to look directly at my county with. Truth be told, I'm a pretty newbie at this, and so there's a lot of information that's totally brand new. A lot of it is going over my head, and so really just getting the exposure is what I want. But yes, I'm glad to even know that these terms exist. So thank you for this.
I hope you wrote Chris's number down, and I don't suggest you call him tonight, but maybe after 9 a.m. tomorrow, he'll be a little more responsive.
No, I mean, truth be told, we're a ways off from a harvest, so just kind of getting the groundwork is really what we're looking for. So So no, this is all really, really great info. So I appreciate it.
Hey, I'm hoping we're going to harvest at your place next year, Laura. I don't think you're that too far out.
Come on with
We'll
it.
talk about that later, though.
Okay, all right, yeah.
All right. Christian was wondering about tax considerations for commercial thinning, what tax liabilities should be in the harvest contract, which are negotiable. Was that Chris from Back 40, or was there a different Christian on this call?
That's me
Okay.
with the back 40.
Okay.
Because we have a commercial thin that we're going to be doing within the next 4 to 5 years. And we've had the timber cruised already, but we're just trying to start the steps of getting contracts in place and stuff like that. So just some planning we need to take into account.
Yeah, if it's going to be a commercial harvest, it's all going to be based on, if you fill out the small harvester return, it'll be based on the stumpage value. If you use the standard detail, then you have to use the stumpage values that the Department of Revenue produces twice a year. And those stumpage values already have the logging costs factored in. So it's a totally different, animal. You just use those costs, the volume by species times that amount, and that gives you your net stumpage value.
Okay, thank you.
I'd like to add one more thing to that.
Yeah.
If it's a commercial thinning, you might want to really look at the standard detail, because since we reproduce them every 6 months, it depends which way the timber market's going. Because if it's way up here and we're down here, then you're probably going to get a better deal on the tax break if we're in the trough. And then if it reverses and we produce those stumpage values when we're at the high end, then the small harvester might be the better way to go. So every 6 months, we produce new ones for the first half of the year and the second half of the year. So you might want to look at that.
Okay, thank you.
Kit asked about deductible expenses, which I know you covered. Is Kit still on the call? Let me pull this up. Kit, did you kind of get an overview of deductible expenses? Do you have a question about any other specific ones?
Thank you. That was a question before the program, so I do understand a bunch better. The only thing I can add is that I used to have a contract with a different forester, and I broke it, paid him off, wondering whether any of those expenses are deductible. Well, oh well, it was the right choice.
Sorry, I'm just sorting through these questions here. I want to make sure I get the ones from people who are on the call first. Chrissy. Okay, well, we have a couple more questions, but I don't think they're from people who are on the call. They were from registrants who I think didn't make it. So if we want to just open it up, if anybody else has questions.
There we go. Yeah, let's do that if folks have questions. Otherwise, if not, Alex, if you still want to ask those, they may be questions other people are mulling or too shy to ask.
I have a question. The DNR publishes a wonderful resource called Timber Sale Query Log Prices. Are you familiar with that?
Yeah.
Now, I had initially heard that survey was fed by timber tax returns from people like are on this call. but I've also now heard that it's not, that it's more from DNR sales. Which is the truth?
Well, it's there. You're talking about the table they produce, the cost
Yeah.
value. Yeah, they do that by they take that from not only their sales, but they do that from mill surveys too. They do that from mill surveys. Our stumpage values that we produce, we use all the timber harvested within the state. And it's a formula. I call it blue smoke and mirrors, but they don't like it when I do that. Anyway, and WFPA checks our numbers. Washington Forest Protection Association checks our numbers. So if the sale is normal, meaning that it's usual, it's business practice as usual, we'll use the sale. If it's out of the ordinary, we don't use it. DNR, that's based on their bid prices and a mill survey, because there's some mills that don't buy state timber. So that's how they get their numbers.
Thank you.
And I encourage anybody that if they do have questions and don't want to ask them, or they come up later on, you can shoot me an email or call me. That's fine. I sometimes am hard to get a hold of because I try to stay out of the office and stay out of sight as much as I can. So I do get, I try to stay in the field. So it's I do answer my cell phone though.
Yeah, does anybody else have questions who are on the webinar tonight? And if not, Alex, if there are a couple other questions that came in from folks that didn't attend, I'd be curious to know what those are.
Yeah, someone asked for more information about the open space program, and I don't think we talked about that today. I don't know what that is.
No, open space is another in the current use tax law. There's open space, farm and ag, and current use timber. Designated forest land is actually administered under a different law than current use. Open space is exactly that. It's areas that you want to remain open and you get credit for whatever it has, like a big swamp with wetlands. You get so many points, and then that comes off your taxes. That equates to of saving off your taxes. You get more points for some things than others. If you allow public access, you get more points. You don't have to have public access, but you can get points for that. Generally, there is some timber harvest allowed. It has to be it's very controlled. And usually open space is pretty expensive to get into.
One thing I'll add to that is because I'm asked to write forest management plans for folks that want to qualify for current use tax programs. And given the type of forestry that our organization does, a lot of folks come to us whose priorities are conservation, are wildlife habitat, basically non-commercial timber production. And that's one of the things that I need to tell them right away is that then the DFL program is not for you, and you should talk to the county about their open space program instead. However, in that conversation, I also try to talk to them about the tool or the role that commercial thinning can play in enhancing or improving the ecological values of their forests, because it's certainly a valid tool. And I have written quite a number of plans that are very strongly conservation focused, but do call for periodic commercial thinning. So back to my earlier question of Chris there of how frequently, or do you have to harvest on any kind of frequent basis? A lot of the plans we write, in particular on lower productivity soils, say up in the San Juans or on some of the glacial moraines around along the eastern slopes of the Olympic Mountains, for instance, Kitsap County, et cetera, you may be thinning once every 20 years, given low productivity. So, but as long as, my understanding is as long as that plan does have a schedule for commercially harvesting and selling timber, then in most cases so far, the counties have accepted that, even though you may have other goals and objectives that are more conservation oriented. So I don't want anybody to think that if you are, a conservation oriented forest owner and that's your main priority, that you're not going to qualify. As long as you still have a plan for managing for timber improvement and timber harvesting somewhere in there, you'll typically qualify. So, Alex, any other questions?
There were a couple of questions that were kind of along those lines of what if I more conservation oriented. So I think we addressed that.
Good. Okay.
And then there's one question that was not so much about taxes, more about their own forest management, unrelated.
All right. Tell them to contact me.
You got everything.
All right. Okay. Kit.
I have a question that might occur to other people too. With my shiny new plan, thank you, NNRG. Should I send that unsolicited to Pierce County?
Well, I don't know if Chris, if you have an opinion on that. She's asking if a lender has recently updated their forest management plan, should they proactively, preemptively take the initiative to send that to the county to file with their property, or let the county come to them?
I'm kind of surprised the county hasn't, but it's one of those things where it's county dependent again. If you have a good relationship with the current use administrator or assessor, then it wouldn't hurt. I just really always worry on some counties, because as soon as you update your plan and give it to them, they tend to go over it with a fine tooth comb again, and then you're back in that saddle. And
I think my advice with most things relating to the government is, wait for them to ask you.
Yeah, let sleeping dogs lie.
Sounds good. Thank you.
All right. Well, we're at 8:30, and unless somebody else has a burning question, I like to keep these things within the expected parameters. So, Chris, thank you very much for joining us and demystifying a very complex topic, and doing it at 7:30 in the evening. So appreciate you joining us.
You're welcome anytime.
All right. Well, I won't take you up on that.